Yeah.
No, you can see. Oh no, you can't even see it.
No, yeah, you got to redo the screen share so I can see it. But I do say we streaming though. Hopefully we get the chat box up this time. Let me send out the post. Yeah.
No, you can see. Oh no, you can't even see it.
No, yeah, you got to redo the screen share so I can see it.
It's live right now. I'm trying to.
It's still showing your old screen. All right, there you go.
So I believe it's live right now. Let me put it up on my phone. Make sure everything's solid.
So we can't see the YouTube chat box.
How do? Yeah, I don't even know how to do that.
Yeah, so let's try to pull that up. I thought it'd be showing us the YouTube. Or maybe you got to click in the left corner where it say YouTube, maybe.
Oh, right here.
Yeah.
Oh wait. Oh no, you can't even see this. I was talking about this. Oh yeah. So here go the live right here. I'm gonna just probably have to.
Yeah.
Put it out here or something so you can see it.
That'd be cool too.
Yeah, here we go. Just live.
It'd be showing. That's the YouTube.
I don't know why they just got me on here though.
Right. I was showing both of them. It's just that's the way the screen show. Whoever talking is gonna show them.
Okay. All right. Good.
Yo. Welcome to Stock Plug Investments, man. Our live channel where we talk about stocks, try to get people the game, man, so they can know how to move in this crazy market. Stock market is a crazy world, a crazy game. You know, as you can tell by the title, today we're gonna be talking about how much money you need to start investing in the stock market. A lot of we get that question a lot from a lot of new people coming into the market, so we thought we should address it. You know, we're gonna start off the live. We're doing question and answers first. You got any questions? We're gonna answer some questions. Get a few more people in here, and we'll go from there.
Trying to figure out how you go to
the chat
comment section. Yeah.
Right. Oh no, it's in the right hand corner. I see it.
Oh yeah, here. Okay. Yeah, right there. I'm looking down below.
Yeah, that's where it's usually at. Yeah, somebody put something in the chat box so we can make sure we can see it. Make sure it's popping up.
Okay, there we go.
Yeah.
Pull up some trade some.
We need to see that chat box though, bro. Yeah, and then make sure. I might need to put it up on mine.
Yeah, I was trying to put it up on my phone so we can share some screen share on here.
All right, if anybody got any questions though, we can get right into it. But if you got some questions, put it in the chat box. We'll start in a few minutes.
Got a few people in here.
Yeah, we need to look up some of them dividend stocks Kramer was talking about. I'm gonna try those out tonight.
They got Apple every day, just cause.
All right, man. All right, then. Let's get started because I don't see no questions in the chat box. So we can just get down to it.
Yeah, we can go ahead and get started then. 3 strategies.
Let's first let's get into how much beginner trader would need to start investing in the stock market. So with a logical answer to that is like it really just depends on how much money the person got, but a good basis would be 10% of one's annual income should go into the stock market. That's a modest number. Like you should really do more, but if you're a beginner, it's good to start with about 10%. And a good example of that is like somebody that make 20,000 a year. If you make 20,000 a year, a month you'll bring about 1,600, 16 or 100, $1,666. So 10% of that is only $160 a month. That's like $40 a week. That ain't really too hard to manage, for a lot of people. I know a lot of people, kick it with $40. They spend that going out to eat or doing all types of stuff. You blow $40 so fast, you should definitely, when you're going to go spend $40, you should really consider like paying $40 in the market to match it. And then that's how you start growing. In 1 year, you'll have 2 bands in your account. Then I just start compounding. In 5 years, you got 10 bands, not even including the money you made off the stocks.
Right. The more consistent you is, the faster you will start seeing growth. So exactly. Like Buzz said, the $40 a week, that's basically what I do. $40 a week, and with dividend stocks, you will start seeing growth way faster.
For sure. And then, $40 a week, that ain't much, man. Like I feel like we all can afford that. You know what I mean? If you can't, chop it in half. $20 a week is better than nothing.
Right.
You got to start somewhere. Time in the market. Something you're gonna always hear if you really, in the stock market stuff is time in the market is better than trying to time the market. And that basically just means you in the market, whether you winning or losing, that experience you getting is better than trying to say, oh, I'm gonna jump in when it's at this price or something. You know what I mean? And get your head knocked off. It's better to learn them lessons, whether it's a L or not. It's better to have that experience and, have some knowledge under your belt so you will have a leg up on the next person. That's all the stocks is, man, having a leg up, having the edge on somebody. Because you can't sell a stock unless somebody buying it. So somebody wise and know when to get out, and somebody don't know what they talking about and they buying it too high. That's the name of the game, man. It is. So that's why it's important for us to teach y'all this, because if everybody gonna be in this stock market, at least y'all can know, at least y'all don't be the suckers. We're gonna try to prevent y'all from being the suckers that's being taken advantage of in the market.
Or getting left behind. I don't want people to get left behind with this stock stuff, man.
Yeah.
Real.
Yeah, because, man, you start early, you can really grow a big nest egg, man, in no time. But I feel like the most important reason for it is because just imagine that same $2,000 that you put in the market every year.
That's the bare minimum, so that's 10%.
Yeah, if you put that same $2,000 in a bank account and you do that every year, yeah, you're gonna have 10 bands and probably like an extra $200 maybe off of interest.
Right.
You know what I mean? Nothing major for real. But yeah, you gonna have that in 10 years.
Right. And that's not gonna be worth the same 10 bands 10 years prior because of inflation.
There you go. Exactly. Inflation, like everything gonna cost more. Right now, today, if you buy something for $1, or no, the best example is a bag of chips, bro. Like I remember growing up, chips used to be 25 cents, bro. 25 cents, bro. You get 4 for $1 every time. and you know what I mean, two cakes, two
It
bags of
wasn't just the
chips.
chips; it was the cake,
Yeah,
all that, and
yeah, everything was a quarter.
it really wasn't that long ago. That was about 15 years ago, I'll
Yeah,
say.
and now everything doubled. Now instead of getting four for $1, you'll be lucky if you get two for $1. That
Right.
is inflation. The price of everything is going up. So that you know what I mean, that dollar 10 years ago ain't gonna give me the same amount of stuff it give me today. That's exactly what inflation is. So just leaving it in the bank, you're gonna lose money. So that's why
Yeah.
we put our money in places that can make us more money, and the stock market is the perfect place to start.
That's a perfect example of how the rich get richer.
Facts.
That's what they do with a lot of their cash. They invest it instead of just leaving it in an account and is losing money to inflation.
Yeah.
Yeah. Basically they just invest it and they get money off investments over time instead of letting it lose money to inflation. So that's how the rich get richer right
Fact.
there.
You gotta have your money working for you, man. You losing it. That's just a fact. But go back to the chat too. So,
Oh yeah, that's huge.
so we did on that. But yeah, if y'all do got any questions while we speaking, just go ahead, put it in the chat box. We'll definitely get to that for sure.
Dang live right here.
Yeah. And then so yeah, so 10% of your annual income is a good start for investing in the stock market for sure. And we're gonna talk more about this on Thursday class about where to invest that 10%. What type of companies, what type of stocks to actually get. So we're gonna get into that on Thursday for sure. But bro, you want to start going over the different investment strategies
Yeah.
real quick so they can
I'm
see
about to
that.
go ahead pull up the definition for us so everybody can get an understanding. Yeah, right here. This is the top 5 right here.
Yep, right there. Yep. So we're gonna touch on 3 to 4 of these different strategies.
Yeah, not all of them.
Yeah, we're gonna talk about the income investing. So if you see it on the screen and you want to, take a screenshot, take notes, whatever you want to do, you can also look at the link and type it in later if you want to. But yeah, we're gonna talk about growth investment. We're gonna get into income investment, and we're gonna talk about socially responsible investment. And then we're gonna also touch on a little swing trading and whatnot. Talk about that too. I'll talk about that. So yeah, go ahead and give them the definition, bro, for the
basically, I mean, it speaks for itself. Value is basically you investing into value stocks. On some on here is basically saying it's a popular strategy by Warren Buffett, one of the best investors. Say the principle behind value investing is simple. Buy stocks that are cheaper than they should be. Right now in this market, a lot of stocks is really overvalued. You can find some stocks that's like undervalued, but right now with stimulus checks and a lot of money just being flooded into the market right now, can't really find no undervalued stocks. But yeah, that's basically value investing.
Yeah, and it's a lot of people that focus on value investing. A lot of people might know about Wall Street Trapper. He a value investor.
Yeah.
Warren Buffett, a value investor. Them two people that people might know in the stock market.
And then got income investing right here. That basically speak for itself. Like if you want to invest and make income from it, this is the way you do it. It's a great way to build wealth over time. Income investing involves buying securities that generally pay out returns on a steady schedule. So basically like dividend stocks and like mutual funds like ETFs, real estate, REITs. Basically you just getting paid a steady amount over time. That's income investing. You get income from your investments. Steady income.
I would throw me personally, I would throw swing trading in there as well, because the swing trade is like a short-term hold. You buy stock
Right.
Holding it, for from one day basically to like 6 months, and you make money in that time frame. As the stock go up, you know where you're gonna get out at, and when it hit that price target, you get out and you take that money you made and you move to the next play, and you can eat off of that your whole life.
Only thing with that is it's just a little bit more risky. You got to know what you're doing when you're doing that.
Yeah, facts. But you can also do that with stocks too. So I wasn't really necessarily talking about options.
Yeah.
That with stocks too. You just got to buy more stocks.
Yeah.
You know what I mean?
And definitely buy before the dividend too.
That move you might want, but
buy before the dividend.
Yeah, or buy the
grab your dividend and go ahead and sell it. That's basically swing trading too.
Yeah, like the homie Blake asked yesterday. Yeah, when you buy the dip, that's a good time to buy a dip. You know what I mean? If you're gonna swing trade it, you will buy a dip, and then as it come back to where it was at, probably go up a few more dollars, then you would sell it.
Yeah,
you know what I mean, smooth swing trade.
And
all right, let's get into some growth investing.
Growth investment. We can move on to 3. So growth investment. Let me see. Basically, you're just looking for growth stocks that had a potential to grow over time. I'm gonna read it. Say an investment strategy that focuses on capital appreciation. So appreciation is basically the price of something going up.
Yep.
Say growth investors look for companies that exhibit signs of above average growth through revenues and profits, even if the share price appears expensive in terms of metrics such as price to earnings or price to book ratios. Yep. Sum that up for them, bro.
Okay, so we was talking about this yesterday, and this related to another question that the homie Blake came up with. He was asking what was that question? He said
how you find good stocks.
How you find good stocks. And this is telling you, I remember mentioning price to book ratio.
Yeah.
You know what I mean? Price to earnings. Like these are good indicators of if a company is good.
Yeah.
And you want to find companies that's continuously growing. You can look at their balance sheets. This all public information. You can look on Yahoo Finance.
Yeah, like even if the stock look like it's so much, it's still room to grow there. You just gotta find that information.
And these usually be like the companies that just came out, or they just came up with a technology that's gonna be real beneficial in the future. A few growth stocks right now would be like Nvidia, AMD. Who else growing right now that's like real? Plug Power. That's another growth stock. Like these is early stocks, and they starting to take off. But this is the beginning. Like these stocks could really be $300 stocks in 2 years. And all of these stocks I named is under 100. Well, Nvidia not, but AMD is under $100, and the same thing with Plug Power. Plug Power under $30.
Plug Power went to $80 and ran all the way back down. So really, right now is a good time.
I'm catching that. I'm like, hey, we not financial advisors.
Well,
strictly for education and entertainment purposes, bro. But Plug Power, that's all I'm gonna say.
All I gotta say is buy the dip. Just look at that.
Hey, bro. Last few weeks. Different, bro. I just dropped $50, but that boy about to come back with a vengeance. So yeah, that last one, socially responsible investing. And that's crazy that we're talking about this because we brought this up on the first live about investing in this specific investment strategy. Go ahead, bro.
Right. So socially responsible investments, a portfolio built of environmentally and socially friendly companies while staying competitive alongside other kinds of securities in the typical market environment. In today's modern world, investors and the general public expect companies to maintain some social conscience.
Facts.
Okay, yeah. So say and they're putting their money where their mouth is.
And that's mainly your generation, bro. I ain't even gonna hold you, bro. Generation Z, Generation Y, bro. They is holding these companies accountable. They spending their money with the companies that's helping the planet and not hurting that planet, period.
Yeah.
And that's gonna show in the company's balance sheets. And
Yeah.
eventually that's gonna show on the stock market. You know what I mean?
Plug power.
Yeah, plug power.
Like we were just saying it.
I'm telling you, bro. I
Just
told him
saying it.
2 episodes ago, bro. That's I'm telling you, that's a real gem, man. A few years from now, man, these socially socially responsible investment companies, I'm telling you, they're gonna have the best balance sheets, they're gonna have the best stocks. Because, like I said, they gotta pour $5 to $10 trillion into this. If we don't do this, the planet ain't no telling where the planet gonna be in 20 years. So this is something that gotta be done.
Yeah,
And if
for
you
real.
see that coming, you need to put your money there now.
Green New Deal. I know y'all heard that before.
Yeah, like
That's
that.
the Green New Deal right there.
Big facts. So we wanna elaborate on some of these investment strategies, and go into a little bit of details and explain how you can how you would implement these strategies. So the first strategy was income investing. We gave y'all value investing, but we ain't intend on speaking on that pretty much because we're gonna show y'all that on the charts. So income investing, like bruh said, dividend investing is it a form of income investing. You buy some good dividend companies,
get that steady amount.
Steady money that money come in every day. Check that post out on our page, on the IG page. Like, that's facts. Warren Buffett really get that money every 3 months, every month, every minute, every second.
Every minute.
Off the dividends, bro.
Crazy, yeah. Off of just literally not doing nothing. You don't have to sell nothing. You don't have to work for nothing. Like, he literally don't even have to sell his stocks. Like, he getting that same amount.
Literally. Exactly. And granted, he got hundreds of $1 million in the stock market. Yeah. But you see, when you build up to that, what you can get, like, bro, they never going broke again. They ain't got no reason to. They pay their money. They got their money working way harder than they could ever work for themselves. So they'll never have to worry about that. And, so that's one form of income investment, which is a dividend investment. But another one, like I was saying, would be like swing trading. And I ain't talking about options because that's too risky for a lot of beginners. You can get your whole mouth knocked off trying to do that swing trade.
Yeah, man.
I know, bro. I experienced it myself. But you can swing trade with stocks. You know what I mean? You might have to put more capital up. You might have to put more money into the trade.
Yeah.
You can definitely get a nice move. Bro, I meant to call you earlier, bro. Did you see UPS today?
No, I didn't even see it.
Bro, jumped $20, bro.
$20.
$20, bro.
They earnings came out, didn't it?
Bruh,
Yes, it was today, bro. And weren't you in there like 2 weeks ago?
Like 2 weeks ago. Yeah, I already made my flip though.
I know, but I'm just saying, like, bro, imagine buying 20 shares of that. You know what I mean?
Yeah.
The stock price at like 190 something, I believe. I was looking.
Yeah, it's right here, 194.
Yeah, like 194. You know what I mean? Imagine buying 20 shares it went up $20, so it was really at like 180. You know what I mean? 20 shares at 180. We could do the math and see exactly how much money that's gonna cost you for real. Let me be accurate. 20 shares at $180. That's $3,600. You invest $3,600, right? On 20 shares. I said 20 shares, right? So
I think you said 100 shares. So that'd be like,
I ain't said 180 times 20. No, yeah, I said 20 shares.
Oh, okay.
Yeah, 20 shares. So yeah, that's a reasonable amount. $3,600. So on them 20 shares, you made $20. That's $400 flip in 2 weeks. You make that at work. Well, some people make that at work. You know what I mean? But that's on a smaller scale. Like, the bigger you do it, the more money you can make, and it's much safer than doing options. So you can definitely swing trade with stocks, take more capital, but it's a lot safer than options because you actually can keep that stock for forever. Definitely can keep that for forever. So that was a good in-depth on income investment. Like, you all on them charts now, bro.
Yeah, I'm trying to see what's going on.
I was supposed to tell you this after, bro. All right. So now let's get into the growth investment. So
yeah, that was basically like growth investment. UPS, we were just talking about. basically finding out that their earnings about to come out, looking up like how much they made and all that. That's growth investment right there. This company got room to grow. So
Yeah.
like right there, just
Look
ran
at
up
that. That's a
$20
crazy move.
one
Look at
day.
that. Hold on, go back, bro, because I don't think they see what I seen on that. So
I
that's
don't
from
know.
2000 to 2020. No, go back to that screen, bro. Go back to the exact one you was on, bro.
Okay.
Because that chart showed 20 years.
Yeah, that's
You
a
see
whole.
how the stock moving 20 years, bro? That's why we do long-term hold right there. That stock was $70 20 years ago. It
No,
just
it
hit
was 50.
$200. Oh,
It
50,
hit a
yeah, I did.
low.
You
It
could
hit a
have bought
low
the
of
dip
40.
right there. Yeah. It bought the dip at 40 and rode it all the way to $200. Like, yeah, it take time, but your money making money over time. You know what I mean? And another bonus is you don't get taxed for it if you don't sell it.
Right, yeah.
That's the real bonus right there. We're gonna talk about that later. They ain't ready for that yet. We're gonna make some money before we get into that. We're gonna make some money before we get to that. But I was talking about growth investment. So with
Yeah.
growth investment, that's just
That's
buying a
basically
good
what it
company
is.
when it's young and
You
holding it for a long period of time and watch the growth in it. You know what I mean?
yeah.
UPS, we just showed you 20 years ago, it was literally at $40. And look at the growth in
Even
it.
even 10 years ago, it was
Yeah,
at
10 years ago.
$40.
Yeah.
So like
10
in
years ago.
2010, I know people was ordering Amazon packages. You know what I'm
Bruh,
saying? Like,
I was graduating, bruh.
yeah, see, like
For real, like if I knew this then, bruh, I would have caught that move. No, let me stop. I would have been on Amazon, bro. I already looked at it. Amazon
right.
2010, bro, was only like $200, bro.
Oh man.
I was sorry I didn't know about stocks then, bro. When I seen that, but yeah, long term, yeah. So growth investment is it's a long term strategy. It's a long term. If you get in a company for growth and you see that in 5, 10 years, this is gonna be one of the big ball players in this industry, whether it be banking, rather or finance, whether it be
Technology.
technology, industrials, consume, all whatever sector it's in. If you see it being one of the top dogs, you buy it and you hold it, and
That's
you just
growth
let it grow.
investment. Yeah. Like this growth
You just let
investment
it grow
right
with
here,
it.
this Apple.
Yeah, and you just keep buying. You just keep buying. If you know you're gonna keep staying in this company, you just keep buying. You
This
know what I
like
mean?
this is a
Buy
perfect
every dip.
example of growth investment and income investment too, because Apple
Yeah,
paid a dividend. So
it's
over time, you would have been getting paid those dividends, and the stock would have been growing at the same time.
facts.
Apple right here,
Man, that's real. Look, man, that's
all the way
beautiful.
from
So
1988,
yeah,
2020.
so this is a good example, Blake. I don't know if you on here, bro, but even when you watch this, I want you to know I was thinking about you when I seen this, bro. Like you find a good company like Apple. You know what I mean? I think I mentioned Apple when we was talking about it. And you just buy these dips. You see how it run up, then fall, then run up again and fall. If it's a
Yeah,
good company and you got faith in it, you know it's gonna be around. You buy every single one of those dips, and you just get
yeah,
more positions and keep adding to it and keep, building your position to where 20 years from now, you be to invested 10 bands in it, but you didn't made 30. You know what I mean? So that's what that growth investment is, man. And that's probably the safest way to invest alongside dividend investing.
yeah,
And
yeah.
them go hand in
Mm-hmm.
hand.
Yep,
Them go hand in hand. So
definitely do, especially ones that pay dividends.
yeah,
That's
yeah,
definitely growth investment, especially if you reinvesting it back into the company.
yeah. And somebody asked yesterday, what's a good way to find like good companies? You could do your own research, what I mean, or you can also like look for you can look for, I want to say, trusted advisors, because most of these people are not financial advisors, but people like Kramer. You know what I mean? If you just want some, quick, give me a stock type stuff, go watch Kramer. He be on CNBC every night at 6 p.m. I watch him every day before this because you know what I mean. I got to stay sharp too. So yeah, he give you a lot of good game. Like this, a good company. He interviewed the CEOs to see where they head at, see
Yeah,
what they got planned for the future. And this is how you find these good companies. He do it for you and show you what's important to being a good company, what's essential to being a good company. You know what I mean? So That's an easy way to find good companies.
So
But
all
we're
it
gonna
takes
show
is
you how
that
to do that later
research.
on too.
That's all it takes is that research, man. You tune in, learn something. That's being socially responsible right there. Investing instead of just going to go invest into a company that you don't even know about.
Right.
You know what I'm saying? So yeah.
Right. That's when it become gambling, bro. A lot of
Yeah.
people think like the stock market is gambling. That's exactly when it become gambling.
Yeah.
Yeah, I mean, when you just throw your money anywhere, you want to be methodical about it, man, because you want it to work out. You want to make some bread. You know what I mean? So if you're going low, man, just find what's the future. What's the future? You know what I mean? And you can't always see that, but sometimes it's in your face and you don't see it. Like, I'm gonna give y'all one more. I shouldn't even give y'all this. But it's so early, a lot of people ain't even gonna catch it. So I can throw it out now. You know what I mean? But before I say it, I'm not a financial advisor. You know what I mean?
Yeah, for sure.
Strictly knowledge-based entertainment. So in the future, if you think about it, we're gonna see drones every day in like 5 years. Drones is gonna be that's gonna be part of everyday life.
Yeah,
Probably like 5 years.
they're using them for agriculture. What is it? Medical
Delivery.
reasons to like fly different medical supplies from hospital
Yes.
to hospital.
Package delivery.
Yeah, packages.
Delivery.
Yeah, food. Yeah, all that. Like,
Bruh, drones is gonna be the future.
yeah,
And right now, a lot of drone stocks is cheap. A lot of them. I'm in some, so I
under
know.
$10.
Yeah, I'm in a lot of them actually. So
Yeah,
I'm doing a growth. That's a growth.
that's growth
strategy.
investing. Yeah, yeah.
That's a growth strategy with long-term implications. This even if I made money off a few of these stocks and cash out. I don't need to cash out. I want this for 3 years at minimum.
All right.
I mean, 2 years at minimum. Let me see what it can do. And I'm just going, when it dip, I'm buying more. Because I know 5 years from now, drones gonna be everywhere, bro.
If it dip,
you know what I mean?
by being so low like that, it really can't dip.
No,
you know
it can't dip,
so low and so new. It can, but not as much.
No, because I mean, some of them ran up, bro.
Yeah,
like,
yeah. That
the one I was in that ran up.
UABS went crazy. That went to like $20 and ran all the way back down.
That boy was running. But I'm still in that, and I don't plan on getting out. You know what I mean? Because that right
But
there.
you plan on getting out?
No, I said I don't.
Oh, I was about to say.
I buy more. You know me, man. When that boy went back to $4, give me a.
I gotta get back in. I wound up just doing a little swing trade on.
Yeah, quit playing. I got a swing trade popping on that too, bro. You know, hey, we can't be talking this on here.
Right.
They're not ready for that, bro. They're not ready. All right, bet. So, yeah, man. Go to the chat, man. See if we got any more questions, anything, man.
Let's see.
You know,
anybody got any questions? Y'all can go ahead and ask us.
Yeah.
Got the chat box pulled up.
But to sum it all up, man, how much money you need to invest, man? $40 a week. You know what I mean? Do something small, something you can afford.
Yeah.
$40, as small as $40 a week. You know what I mean?
And really, if you can't even afford that, if you like unemployed, you know what I'm saying? Just pick up a side hustle.
Yeah.
And invest whatever you can. $1 a day is being consistent. You're gonna see growth from that. That's being consistent. So just pick up a little side hustle and you invest in now. Like you ain't gotta invest a big amount of money or nothing like that. Just be consistent with it.
Yeah.
And you will see growth right there.
And that's facts, man. You
literally can invest $1, like literally. Like 10 years ago, you could not do that. It didn't have Robinhood 10 years ago, like literally.
Right. And and what he talking about is you can invest $1, you can buy fractional shares of companies now.
Yeah.
You ain't got to buy a whole share. You could pay $5 on Tesla today.
When I seen that, that right there told me I should be investing for the rest of my life.
Exactly.
Knowing that I don't need to pay for the whole share, I can just go ahead and break it down and diversify it all the way across the board. Exactly. That's why we should be investing. We do not need a lot of money to invest.
Yeah.
Like
that's facts. That's facts. And let me hit him with the quote of the day real quick, man, so we can get up out of here. Appreciate everybody that tapped in, man. Everybody that's going to do this in the future. Appreciate you 100%. So the quote of the day is trading is 10% buying, 10% selling, and 80% waiting. I mean, that's self-explanatory, man. We don't do too much buying and selling. We hold.
Oh,
We buy,
long term.
we
That's how
hold.
you build generational wealth, man. I want my daughter to be able to live good. You know what I'm saying? Pay for her college, all that. Right now is the time to invest it.
Facts. Like we is really supposed to start this at like 25 at minimum. You should
Yeah,
be investing about 25. Yeah, I
yeah,
mean, bro, you definitely ahead of the game, big dog.
yeah, for sure, man.
Definitely ahead of the game. So salute to you on that, man. Keep that
Sure.
up, man. Salute to everybody that tapped in today, man. Appreciate all the love. We're gonna get up with y'all later, man. Thanks again, man.
Thanks, y'all. We out.